What's going on, everybody? My name's Danny. Welcome back to Crypto 99. I'm in the mountains, give you a little bit of a 360 view of how my last day and next day will be, and obviously today as well. But had to get out of the hustle and bustle of the city, come out in the mountains, decompress a little bit, and in doing so, it gave me some time to think. And I want to share something with you that I've had a lot of time to think almost all the way through. It's the psychology of the cryptocurrency investor. Because I was thinking about this on the drive up here. It's about 4 or 5 hours from my house. I'm thinking, what makes us different? Like, what makes the cryptocurrency investor a cryptocurrency investor, and what makes more of a traditional investor stay with traditional markets or jump into cryptocurrency? Are there common themes? Whatever. So crypto is a very obviously diverse field of investing, just like regular investing is. And I'm going to kind of detail that for you briefly and then give you some common themes. And maybe you identify with some of these themes of cryptocurrency investors and you're not in it. If you do, you might want to take a look at it. And at the end, I'll kind of remind you this, but as you go through, there's a link down below for our Discord channel. It's totally free, obviously, but there's a lot of people in that Discord that share all of these common themes. So you'll kind of help bolster your cryptocurrency enthusiasm, for one, investment prowess, two, and maybe build some friends along the way. So cryptocurrency is very, like I said, it's a diverse field. So there's everything from the guy that just buys and holds all the way up to the dude that day trades or trades on the hour and trades with leverage on BitMEX. You can do one or all of those things, but all of those would make you, per se, a cryptocurrency investor. Now, the main piece of that is you've got to figure out how much risk you're willing to take on. If you buy and hold, everything is risky in cryptocurrency because the market moves tremendously fast. But buying and holding is the least risky of those options. And then obviously, buying and trading on BitMEX is the most risky of all those options. Didn't think that was too much rocket science, but sometimes you need to just kind of air that out so everybody knows. So you have to decide, how much money am I willing to invest in this? What am I willing to risk? What am I willing to lose? And how risk averse am I? How much risk am I willing to take on, and how much should I, not take on? And once you've decided that, then you can say, okay, do I hold these qualifications? Like, I'll give you an example. I'm very, not me personally, but I'm willing to take on a ton of risk. I've got, $500 that I got as a bonus in my job that I really don't have to do anything with it right now. I'd love to throw it in crypto. Okay. If you want to take on a lot of risk, spend some time, learn how to trade, unless you already know how to do so. If not, put it in Bitcoin or Ethereum or something like that and just hold it for a while. That's a decent example. So now here's some of the common themes. And this is kind of where you can dial down, like, yes, I'm already a cryptocurrency investor and I hold these qualities. Or you could say, I'm already a cryptocurrency investor. I hold maybe two of these. So maybe I need to look at, like, am I willing to take on as much risk as I am, or should I dial it back a little bit? Or, wow, I hold all of these and I'm not invested in crypto at all. Why not? Like, what's stopping me? So the first quality of a cryptocurrency investor psychologically is we're very forward thinking. And I say that not forward thinking as like we look into the future and can imagine a world where everyone is using Bitcoin for day-to-day peer-to-peer transactions. That's not the case. I mean forward thinking as in you trust the technology enough to where you know that the underlying technology, whether it's Bitcoin or not, will change the face of the world. You just obviously don't know when that's going to be. So you're forward thinking enough to know that what I'm investing in right now is going to shape the landscape of the world. You're not scared of the change. You're not scared of blockchain changing how you have to do your banking, or changing how, if you work in a supply chain job, changing how you have to learn how to do different supply chain mechanisms. You're not worried about that. You're forward thinking enough to trust it. I'm not saying you think this is going to be the Jetsons, but that's definitely a key piece of being a crypto investor. If you're not forward thinking and you don't think that cryptocurrency or blockchain, we'll throw crypto out. If you don't think that blockchain tech is the future and you're not invested in cryptocurrency, or you are even, you need to take a look at that. You need to figure out, is this the right thing for me to do? Because if you're not forward thinking and the prices start to go down, if you weren't forward thinking and got in February or March and the prices went down, you're going to get out and you're going to lose money. So, like, I'm not even saying that this is this crazy utopia. I'm saying that if you're not forward thinking and the prices move in the direction you don't want them to, you're less likely to hold through it and come out better in the end. You're more likely to lose money. 2 is you've got to be willing to learn and educate. That's kind of a two-pronged thing. You've got to be willing to learn and willing to educate. And what I mean by that is a perfect example. I mean, everybody doesn't have to start a YouTube channel to educate people, but I was willing to learn and I was willing to educate. And now I'm doing both. I learn every single day and I try to educate every single day. I'm not saying you have to do it on this grand of a scale, but, and I told you I'd kind of like plug this in a little bit because I'm assuming some of the people watching this video are relatively new or totally new to cryptocurrency, like this is foreign to them. Our Discord channel has a lot of people that are willing to learn and willing to educate for free, which is kind of the goal of this. So if you're one of those people that is brand new, you're willing to learn, and then you're willing to, once you get some of that knowledge, put it out and educate others. Discord's down below, but you have a piece of a cryptocurrency investor in you, or a blockchain investor of that. We don't even need to do it in crypto, digital asset investor in you. And lastly, I don't want to make this, too crazy where you've got to meet these 12 criteria. I just want to give you 3 things that are relatively general that people can attain and can see in themselves. Lastly, for a cryptocurrency investor, you have to be extremely self-aware. And I mentioned this at the beginning because, yes, in traditional stocks, there's a lot of inherent risk in just the stock market. And if you're not invested in cryptocurrency, you may also see some inherent risks in whatever asset class you're investing in. But take that risk, multiply that by 2 or 3 or 4. So you've got to be self-aware. If you cannot handle risk, and if you can't handle just buying Bitcoin or Ethereum or something like that, or another project you believe in, doesn't have to be those two, I'll kind of start there, but if you can't just buy it and forget it just like you would a stock, maybe you check it every once in a while, but you just say, stocks are going to be there and go up, quote unquote, right? In the long run. I mean, Tony Robbins said it best. If you missed, the average return, I think year over year was like anywhere from 8 to 10%. If you were out of the market for the one best day of the market in the last 25 years, that return is down to 6. The 2 best days, it was down to like 4. If you're out for the 5 best days, just 5 days, I think you lost 1%. So if you're not willing to just stick with it, just like you would stocks, then you're not necessarily, you don't necessarily need to do this because mentally, it's not going to be good for you. It's just not. So, sorry, I kind of went off on a tangent there. So it's back to self-awareness. You've got to know how much risk am I willing to take on, and then what is my investment prowess? Am I a savvy investor? Have I done this before? Can I trade? Or you need to say, okay, if I'm relatively risk averse, but I don't know how to trade, what am I comfortable with doing? Don't go out of your comfort zone and FOMO into something that you're going to lose money on. That's kind of where this self-awareness thing is heading, because people will get out of their comfort zone and say, holy shit, all these people have made tons and tons of money in this specific thing. It's really risky, but boy, they're making a lot of money. I'm going to go into it even though I'm not comfortable. And they go into it and then they lose money. And then they freak out, yank the rest out. They've lost 60% of their investment, whatever the heck it is. 20% is a big loss in my opinion. So they lose their investment and then they're like, oh, I never should have done that in the first place. Maybe crypto's not for me. But if they would have just been self-aware enough to say, that's too risky for me, or I don't trust that, or I don't know anything about that, I'm not going to do that yet until I learn more. If they deployed some self-awareness, they would have not lost the money. So that's where self-awareness comes in. You've got to know what's best for you. So the 3 commonalities in the cryptocurrency investor. 1, you've got to be forward thinking. You have to be. In some way, shape, or form. You don't have to be, like I said, you don't have to believe in a Jetsons utopian society, but you've got to be forward thinking enough and trust. Trust kind of moves into the forward thinking piece. Trust the tech. 2, you've got to be willing to learn and educate. Because if you're willing to learn and educate, you will be a very, very good cryptocurrency investor, because you're constantly, the more you try to educate people or learn and then relay knowledge, the better you're going to be in the long run, and the earlier you'll get into things that may change the shape of the world. And then 3, you've got to be self-aware. You have to be. You've got to know what you're capable of taking on in risk. You've got to know what you know, and learn what you don't. I don't know how many times, I probably haven't said that a lot, but I think that a lot. Know what you know, act on what you know, learn what you don't know, and then the cycle repeats itself, kind of links into the education piece. But I hope that made sense. I hope those three characteristics at least like encompass some things of what you guys that are watching this video have in your repertoire of investing, or in your repertoire of just general life. If you like this style of little mountain rant, I can't do mountain rants all the time, but hit the thumbs up button and subscribe button if you haven't done so already. Also, if you're new to crypto, or relatively new to crypto, and you don't know who the hell I am or who the hell anybody else is that would be commenting on this channel or in the Discord is where the value is brought. I can talk into a camera here and give you some value, but the Discord is where the community factor comes in. So join that Discord. The link is in the description box down below. We're closing on 2,000 people in there. So it's really, really a great community for you to deploy some of these characteristics of the cryptocurrency investor and really kind of pull on that learn and then and then educate piece as well afterwards. So thank you guys for watching the video. I hope I brought you the value that I do aim to bring you every single day, and I look forward to bringing you the value next time. If you're new, welcome. If you're not, stay tuned.